Today I'm back here in Morningside Park in Miami, and I'm just kind of like doing like a little tour around town of some of the places that I know I'll actually miss while I'm not here. And I've only actually shot a video here once, but last time I was here I loved it so much. Really wanted to come back and share some of the tranquility with you guys, as well as some of the beautiful water views here, because today we have either good news or bad news depending on who you are and your opinion on all of this. And the big debt avalanche that we have all been talking about for months now is going to come to fruition, guys, whether you like it or not. And what am I referring to? I'm referring to the resuming of the student loan payments. Now, we knew that the student loan payments were going to resume this fall. However, just today, or just yesterday, the Supreme Court struck down Biden's loan forgiveness. So anybody that would have been eligible to get the $10,000 or $20,000 of loan forgiveness, that's out the window now. And it's not really a big surprise that this happened. I think a lot of people probably thought that this would be the outcome, and of course it is. But contrary to what a lot of people think, some people think I'm just out for student loan borrowers, like I have something against people that took a student loan, which is not true at all, guys. I'm just here reporting the facts, and this is a huge thing that's happening right now in our country that's going to have a massive impact on our economy, because never before have we ever had a time in history where we've had these massive payments. 40 million Americans that owe $1.7 trillion in student loans. Never ever before in American history have we had a situation where that level of debt has seen a moratorium or a pause, just like we've had for the last 3 years. No one has had to make a payment on this, which is unprecedented. And I think it's an understatement to say that the non-payment of these loans during this time has really helped goose the economy, along with all the stimulus that was pumped in. We just talked the other day about how so much of the PPP money was stolen, so much EIDL loan money was stolen, all this fraud, and they've barely arrested 1,000 people from this, and it's been 3 years. So way more people need to go down for this, because the amount of fraud that has happened with all of this is probably far higher than what the government is estimating. But the thing is, there are some shocking statistics that go along with the student loan payments that are going to be resuming in the fall. And the first thing that I saw when I read this, that I just couldn't believe it, guys. Like, we talked about how a lot of people are planning on just not paying, like they're going to do a strategic default and not pay for it and hope that it goes away. Well, that's not a very good plan, so good luck to you if you're doing that. But the credit company Vantage Score, they estimate that anywhere between a quarter to 75% of people who owe money on the student loans will actually miss the first payment. Can you believe that? Up to 75% of people, they're saying, may miss the first payment. That's astonishing. And the reason they're saying that they might actually miss this first payment is because, like I was telling you, not having these payments for the last 3 years has had a major impact on the way people are spending money in the economy over the last few years. And now that this is all coming to an end, people are now going to have to decide, oh, which debt do I pay first? Do I pay my student loans? Do I pay my car loan? Do I pay my mortgage? Do I pay my credit card? Because it's another bill added to the mix that people don't have right now. And when you take into consideration that the average payment is somewhere in the neighborhood of $400 a month, that's like taking on an extra car payment, guys. So that is significant. That is a huge amount that most people aren't prepared for. And it's estimated that a good chunk of people that owe money on this are already living paycheck to paycheck. So what's going to happen when you introduce this additional $400 a month debt? And that's really why I keep talking about this, because it's not about who owes the money, or I wish people didn't get student loans and didn't go to college and all this, whatever. I could care less. The thing is that this is a debt avalanche. You're about to start seeing the first snowball start rolling down the hill, if you know what I mean. It's pretty cool. They have this spot right here where you can come out and launch your paddleboard or your kayak or whatever right into Biscayne Bay. But here's the other part of this that people need to think about right now, is it's not just the fact that people are going to start paying about $400 a month on average extra, but it's the fact that they're not going to be spending the money on the other things. And we're already so close, we're at this tipping point of going into an official recession or not going into one. And to me, this is probably going to be the last straw. That's what I'm thinking. And if this many people that Vantage Score is saying are potentially going to miss their first payment, this is going to make people's credit score dip anywhere between 49 to 82 points just from missing that first payment. Well, why is that a big deal? That's a huge deal because that affects how much credit is going to be available to people who miss those payments in the future. Because when your credit score goes down, the less likely it is you'll get approved for any type of loan. And if you do get approved for one, guess what? Interest rate and borrowing costs will be higher. So, we have all this happening simultaneously with the credit crunch. We have more bank failures likely to happen over the next several months, right? We have banks tightening up lending because they're losing money right now, and this is one of the only ways that they can prevent themselves from going out of business. And when you combine that with the fact that so many people, 40 million people, and roughly maybe half of them, let's go in the middle because they say anywhere between 25 to 75% might miss the first payment, have a reduction in their credit score, that's bad news for the US economy, guys. In what world explain to me that that is good news? Because I don't know one. And when you have that many people in financial trouble, that spells disaster, if you ask me. So whatever you do, the best strategy if you owe any money on a student loan and you're going to be somebody affected by this and you have to start making payments again in the fall, don't miss a payment, guys. Not even the first one. Never miss a payment, because that will have a detrimental impact on your credit score, and you might not be able to get that new car when you need to get it, or you might not be able to qualify for that mortgage if you've been looking to buy a house or whatever it might be. So just don't do it. Don't miss the payment, because it's not going to be worth it. Quick interruption. Literally, as I was shooting this video yesterday at the park, there was more news coming out about this, and I just want to make sure that everyone watching this video knows exactly the latest of what's happening. So I want to interject and put this in here. Even though the forgiveness plan got shot down in court, the Biden administration is doing a couple of different things to try and make it a little bit easier for people that have the student loan payments when they actually resume. Now, the first thing that they're doing is for 12 months after October, so basically until October of 2024, borrowers will not be penalized for late, missed, or partial payments. But interest will still be accruing on your loan, guys. So if you think that you're going to just not pay for an extra year and you're not going to be penalized for that in some way or another, that's not true, because you will be accumulating interest on your loan for an additional year without making any payments. But they're saying what they're going to do is they're not going to report you to the credit bureau. So like I was saying earlier, that people are going to take a hit on their credit if they miss the first payment. That looks like it might not actually happen according to the latest update that I'm reading here, although who knows, right? There's been so many things changing with this. It's been such a fast-moving story. I just wanted to throw this in here so people know I'm trying to give you the latest and most accurate information. And the Biden administration is also introducing something called the SAVE plan, which will be an addition to the income-driven repayment plan. People who were on a repayment plan before and your loan payment was 10% of your discretionary income, that'll be knocked down to 5%. And no borrower making less than 225% of the federal poverty level will have to make a monthly payment. Loan balances will be forgiven after 10 years, they're saying, instead of 20 years if the original loan balance was less than $12,000. However, I would say most student loan borrowers have loan balances above this amount. So if you do, then this won't apply to you. And they're also saying that borrowers won't be charged with unpaid monthly interest, so balances won't grow if they make their payments. Even if the monthly payment is zero, because their income is low. So one thing that's just not clear here yet with this is everybody's interest going to stop accruing if you're making no payments for the first year? We don't know, guys, but I just wanted to throw all this in here because this is the latest update to this, and the rest of the video still applies, because the reality is most of people who are going to be responsible with this and actually want to make the payments and not accumulate more debt from delaying the inevitable, then they're likely going to start having to shuffle things around in their life and start repaying things, and it's still going to have a major impact on the economy. Maybe not as big of an impact as I thought in the first part of this video, because you're not going to see everyone have to repay all at the same time, because if you're super low income or in the poverty level, whatever, people are going to be able to catch a break from this and not have to start paying right away. So of course they had some kind of plan B up their sleeve, and they're trying to just kick the can down the road for as many people as possible as they can, and make payments lower for people. But in this next part of the video, I'm going to explain why having a lower payment might not be the best thing. Now, the Department of Education says they're going to be in touch with people that owe money on the student loans and try to give people a decent amount of time when it comes to a heads up and what to expect and how to handle this. So, you know, if this is you, get ready to receive a letter in the mail from them or a phone call or something now that the Supreme Court decision has finally been made. And I'm going to offer you some helpful information here too, guys, because obviously this is not good for people that really can't afford it, and there are options out there for you to lower your payments if that's something that you need right now. The Education Department has income-driven repayment plans, and they're supposed to be restructuring these now that the Supreme Court has made their decision, making it so that even more of your income is potentially shielded from the repayment plan, so that will potentially lower the amount you'll pay. But keep in mind, if you do something like this, then you're basically kicking the can down the road and making your payment more affordable, but you're stretching out how long it's going to take you to repay these loans, or maybe never repay them, with some of the stories that we've covered on how people just can never get out of the student loan debt because the interest rates are high right now. This is not a great time for the interest accumulation to ramp back up on these loans, to say the least. Just keep in mind, if you're trying to get on one of these income-driven repayment plans, the lower your payment's going to be, the longer it's going to take you to pay back this loan. So I wouldn't be doing anything like that unless you absolutely need to. And it's not just me making all this stuff up like it's some big deal, guys. Like, literally the Federal Reserve Bank of New York is saying that most people are going to have a hard time to fit their student loan payments back into their monthly budget, because these payments are going to start picking back up again, literally at a time when delinquencies on credit cards and delinquencies on auto loans are all picking up as well. So like I said earlier, a lot of people are going to be at the point where they're going to say, hey, well, what should I pay? Should I pay the credit card? Should I pay the auto loan? Like, what is the most important thing to pay for? Now, I'm not your financial advisor. I can't tell you exactly what to do, but I would say definitely the roof over your head is probably the most important thing to pay for. Everybody needs a place to live, right? So I would be looking at that first. And if you're deciding between paying for the car loan or the student loan debt, that's a tough one, guys. And it's not just the New York Federal Reserve Bank that thinks that the defaults are going to ramp up either. In fact, in the court argument, the Biden administration's counsel argued that without the cancellation of some of this debt that they were fighting to get, that there will be a surge of loan defaults and delinquencies once payments resume, okay? So anybody who thinks that I'm just making this up or making the situation to sound worse than it is not, guys. I would say this is probably the biggest looming problem right now in our economy besides inflation. Probably those two things go neck and neck. Like, everybody has been wondering what could bring this whole thing down. To me, this is it. Because when you have that many people that can't afford a payment and start defaulting on things, that's like the first domino to fall. And if you've ever lined up dominoes, you know what happens when they start to fall. Now, another thing that's happening is mortgage lenders and mortgage brokers are getting so desperate right now that they're putting together all of these creative programs to try and get people into houses because no one's buying anything, guys. In fact, the pending home sales just went down 2.7% month to month in May. Now, this is at a time when home sales are supposed to be flying off the charts. Like, this is supposed to be the busy time of year, right? And now that we're already approaching July, that's largely over with. The home selling season is going to be mostly over pretty soon. And to see month over month drops pending home sales at a time when it's supposed to be busy is troubling. Now, obviously you can point to low inventory as being one of the main culprits of that, combined with high interest rates, and with that I would agree. But the reality is inventory levels are on the rise, but they're still just too low. If we look at this chart from Redfin right now, we can see that inventory levels are roughly where they were back in April of 2022. But they ended up climbing quite a bit higher to around 1.8, 1.9 million homes for sale. And at the moment, there's barely 1.5 million homes for sale. And pre-pandemic, this time of year, guys, before everything went insane, we were looking at 2.3 million homes for sale this time of year right now, where we're at, versus only 1.5 million homes for sale. So we would need another million homes for sale on the US housing market for things to be back to normal, so to speak. But back to what I was saying, the mortgage brokers and lenders are doing all sorts of desperate things to get people into houses. I just got this email, like check this one out, guys. You have this mortgage lender looking to do things where let's split the mortgage buy down. Now, the buy down is when usually the seller will pay for a reduction in your mortgage interest rate for the first 2 or 3 years of your loan. So if interest rates are 7% right now, then the first year they could buy down your rate to being 5%, and the second year your rate would be back up to 6%, and then finally the third year when it expires, your interest rate will be back to normal, what the rate is right now at 7%. And the idea here is that they're basically betting that interest rates will be lower in 3 years from now and say, oh, you can just refinance when the time comes. Well, that's only going to happen if home values don't drop. Otherwise, people are not going to be able to refinance, first of all. And even if home values continue to go up, which is very unlikely for the next 3 years, but let's say that happens, here's the thing, guys. People borrow against their equity. And when you borrow against your equity, guess what you can't do when the time comes? Refinance, all right? And also, just like the student loan payments, people get used to a lower payment, right? At a 5% rate, you're getting a much lower monthly payment versus at a 7% rate, people get used to not having to pay all this money, so they go out and spend it on other things. And then 3 years goes by, oh, the payment's going up by $700 a month. Uh-oh, what do we do now? You know what I mean? But anyways, what they're trying to do is they're trying to split the buy down now, where multiple parties in the transaction can now contribute to the buy down. You can have the builder contribute, the seller contribute, even the lender contributes now, and the real estate agent. So you're looking at 4 different people pitching in, right? And basically handing over free money to the home buyer to push them into buying a house right now. And let me ask you something. If buying a house was such a good idea right now, and it was so affordable and everyone should be doing it, why would they have to be pulling these shenanigans to get people into homes, right? Before, you had to beat the buyers off your front porch with a stick because interest rates were low and prices were still fair. Now that that's not the case, they're basically attempting these desperate measures to get people into buying right now, which is insane. And it's not just this mortgage broker that's doing this, guys. This is something that's happening all over the place. You have Rocket Mortgage that recently came out with their 1% down mortgage, where you have to pay practically nothing to get into a house, which is the same exact story we saw during the subprime loan crisis in 2008. And you also have local governments giving out free money, and mortgage brokers pushing that as the next reason to get into home ownership. I mean, look at this one from Fairway Mortgage, guys. The Hometown Heroes program here in Florida has already run out of money, but they say don't worry because another $100 million is being made available at the beginning of July. You can still go under contract now and reserve your funds and lock in your loan on July 3rd. In addition to increasing the income and loan limits, the big news is this. They are now removing the occupation requirement that was required. Before you had to be either medical or law enforcement or military. Now you just have to work for an employer with a brick and mortar location in Florida. They don't even need to be headquartered in Florida. You have to be a resident, and buyers also need to be verified that they work 35 hours a week in order to qualify for this. Even some self-employed borrowers might need a CPA letter stating that they work 35 hours plus per week. So you have the state of Florida here giving people free money to go out and buy houses, which is another reason that home prices here are so high. Just another way to prolong the inevitable and keep things high for everybody. Right? And now they're going to throw another $100 million at the problem, which is likely just to make real estate more expensive. And you have mortgage brokers that are completely pushing this as like, hey, you need to already lock in your loan, you need to already lock in your reservation for this money, and you need to go out there and buy a house. Forget about the interest rates, forget about the cost of ownership, forget about how much you're going to pay for the house. Just get this free money and worry about all this later, guys. Same thing with the buy downs. Just get into the house because we're going to give you a good deal for the first few years, and after that, best of luck to you. Who thinks that's good right now? But that's what mortgage brokers are doing because it's the only way to get people through the door. Real estate transactions are practically at all-time lows right now, and we're supposed to be in like a booming economy, guys. I mean, I'm telling you, all it's going to take is the inventory to shoot back up, and that's going to be the end of this crazy housing market as we know it. This cannot go on for very much longer, so it'll be interesting to see what's going to be the catalyst for that, what's going to cause the inventory to go back up. Right now, it could be anything. It could be the student loan repayments get worse. We could see a recession. We could see unemployment go up. We could see more layoffs and people being forced to sell. We could see property taxes and insurance getting too expensive, people being forced to sell. Like, there's so many different angles on where inventory can come from right now that the low mortgage rates that people got, I don't believe is going to be enough to help most people hang on after a while. People only have so much money and your income only goes so far in times like this. And if you're enjoying this video, guys, please make sure to subscribe to the channel and always remember to like the video. It helps the channel out tremendously. And if you ever are looking for a real estate agent or you want to buy a house or sell a house, always remember I have a free service available to you. All you have to do is click the link in the description below and I can get you set up with a real estate agent to either help you buy or sell a home right now. And my team will be in touch with you ASAP as soon as you fill out the form. Now, one last thing I wanted to cover for a minute is somebody asked me about mortgage recasting. And this is something I actually never heard of before, probably because it's not very common, but it does exist. And this could be something good that current homeowners can do who feel locked in to their current house, like they don't want to give up their interest rate, but they have extra money and they want to lower their monthly payments. Well, refinancing would be the typical option that people would do with this, but instead you could do something called mortgage recasting. And what this is when you basically make a large lump sum payment toward the principal balance of your loan, and then your lender will re-amortize your mortgage with the new balance. Your interest rate and the term remain exactly the same, but what this does is it lowers your monthly payments because your principal went down. So say you have an extra 30, 40 grand laying around and you don't want to put it in the stock market, you don't want to buy an investment property, everything seems too risky. Well, you can use this to pay off your house earlier, but not only will it pay off your house earlier, but doing the recasting will lower your monthly payment. And that's basically the difference between just making an extra principal payment and making the large lump sum payment, because when you just make that extra principal payment every month or a couple times a year, whatever it is, to pay off your mortgage early, what that does is just makes it so you have less payments and you'll pay off the mortgage before 30 years, right? But in this case, what it does is you'll still have your 30-year mortgage, but now your monthly payments will go down. And of course, there's all sorts of requirements that your lender will make sure that you meet in order to be eligible for this. And there is a fee, like Rocket Mortgage, for example, they charge $250 to do this. And usually there's a minimum. Usually you have to pay at least a $10,000 lump sum payment to even qualify for something like this. But it's an option for some people that, you know, have extra money right now and are doing well and want to lower their monthly expenses by doing this. I personally like the idea of doing this because it actually lowers your monthly payment rather than you just pay the same amount until your mortgage is paid off. And having a lower monthly payment on anything right now would be a relief, I would say. So just something you might want to look into if you have some extra money and you're looking to pay off your property early and refinancing is not an option right now. If you enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video. And if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.